Good morning, traders, and welcome to BCR's morning market analysis. Let's take a quick look at the key moves shaping the markets this morning. First up, let's have a look at the US dollar index, the DXY, which fell sharply midweek, breaking below 100 and the 200-day moving average at 99.74 as mixed US data and some dovish Fed comments pushed December rate cut expectations to 83%. Signs of late Q3 stagflation, weak demand and sticky prices have kept the dollar under pressure. Sellers remain firmly in control with the next key support at 99.49 and the psychological level of 99. A recovery above 100 and the 200-day moving average would be needed to shift the sentiment. Next up, let's have a look at WTI crude oil, which traded above $58, continuing Tuesday's decline after Ukraine signaled openness to a US proposed peace framework with Russia, raising expectations of a potential end to the Russia-Ukraine war and a return of Russian supply to the markets. Markets also expect a global surplus of at least 2 million barrels per day by 2026. Technically, WTI remains in a clear downtrend, consolidating near the 20-day moving average at 59.49. The key support zone remains around the psychological level of 57 to about 57.03, with 55.97 below if that level breaks. Next up, let's have a look at gold. Gold held around 41.60 after touching its highest level since November 14th, as December rate cut odds climbed to 83%. A lower rate environment always supports gold, while trading is subdued ahead of Thanksgiving holiday. Prices remain above the rising trend line, with 4,000 to 38.86 forming major support. Resistance sits around the $4,200 psychological level and 42.45. Indicators show weakening bearish momentum and a gradual shift towards a mildly bullish tone. Lastly, let's have a look at our very own Australian dollar, which hovered near the psychological level of 65 cents after stronger than expected October inflation, which boosted expectations that the RBA will maintain its cautious stance. Trimmed mean inflation rose to 3.3%, highlighting persistent price pressures. The pair remains range bound, trading below the 50-day moving average at 65.34, with support at the 200-day moving average near 64.62 and resistance sitting around 65.34 and 65.80. Well, that's all for today's morning market analysis. We'll continue monitoring developments in the markets. As always, manage your risk and happy trading.